Good afternoon to you all. Welcome, everybody. And thank you for being here so late on Saturday afternoon. We are going to hearing about the importance of investment in climate change adaptation and disaster risk reduction for resilient infrastructure in South Asia. I want to thank the co-organizer, the IFC, the International Finance Corporation, and the Coalition for Disaster Resilience Infrastructure for helping to make this event happen. As you can see, we have a distinguished panel with a range of background from the public and the private sector. We were due to have a keynote speech from Maldives Minister of State for Environment, but unfortunately, she has had to withdraw her presence in the last minutes. So while of course I will not be able to take her place, allow me to give a few introductory remarks, a few introductory elements to set the scene to the region that we are talking about in this afternoon. As you know, more than half of all South Asians, about 1 billion people, have been affected from one or more climate-related disasters in the past 2 decades. South Asia Climate Vulnerability Index is among the highest in the world. And of course, as climate crisis worsen, these disasters are expected to become more severe, more frequent. We have seen the case in Pakistan. Record rains this year first led to flash flood and subsequently to widespread catastrophic flooding. We have seen in Bangladesh that experienced the worst flood in more than a century, killing more than 100 people and displacing near 4 million people. And of course, this example illustrates how serious the situation already is today. At the same time, only very small part of global infrastructure investment integrates today resilience and sustainability consideration. When we look to the Global Infrastructure Basel Foundation, we know that 75% of the infrastructure projected to be in place by 2015 don't exist yet. This is a flash of opportunity because this means that we still have the opportunity to build a world that will be greener, more resilient, more sustainable, and more inclusive. But this is a big challenge. It's a big challenge because we know that the global demand for infrastructure is far outstretched for the amount of financing that being invested into the sector today. And we know that the gap is more clear, of course, in emerging markets and in developing economies. So the deficit in the developing economies is very, very high, and it's one of the largest. We know already that the disruptions that are caused by natural hazards, as well as poor maintenance and mismanagement of infrastructure, cost households and firms around 400 billion a year in low and middle income countries. So it's clear that investing, and when I talk about investing, I'm looking to the public, the government, and the private sector. Investing in resilience infrastructure is not only logical, but it also makes financial sense. We know that, of course, on the top of lagging investment being faced, governments have also faced high inflation, slow economic growth, COVID pandemic, which, of course, have constrained the fiscal space of governments across the region. This is the scenario that we have in front of us in South Asia, and this is why a combination of measures is going to be needed to help us make quicker progress. Of course, these measures include better regulatory framework to incentivize private climate action. We require more concessional funding, as well as new financial instruments. Do not forget also the importance of greater domestic resource mobilization. What I can add here that as from the European Union side, we have for the first time, we'll now be able to mobilize new financial guarantees in Asia that will allow us also to help to reduce risk for investors, will help us to incentivize investment, for example, in small, medium enterprise, in green technology. And of course, this will support the climate resilience system. So, while we keep developing our international partnership, we need to use all our assets, all our capabilities to provide support to mitigate and adapt to climate change. So I'm very much looking forward to listen to all our key panelists on identifying the solution and sharing with us their experience. I stop here and I move to our panelists. And I will wish to start with our first panel speaker, Mr. Vivek Pathak, who is IFC Global Head and Director for Climate Business. It's leading on business development, standard setting, and new product design, and is working to mainstream climate lens into IFC business. As IFC Regional Director for East Asia and the Pacific, I have to say, Vivek, you were one of the first at IFC to integrate climate into all aspects of your work. So, great job. Now, Vivek, many thanks for being here with us. Let me first ask you, on the basis of IFC experience, what are the 3 things that we can do to incentivize private sector to invest in building a resilience infrastructure? Over to you.
Sure. Well, a very good afternoon to you all, and thank you for being here, and thank you very much to the EU for having us, and thank you, Carla. And let me start out by first and foremost congratulating you all on the new instrument, the EFST++. And I think we need not only an EFST+, we need +++, many more such instruments out there which will help, new technologies which will help de-risk, because that is one of the greatest challenges that we have. So I really hope we can collaborate and really make this a success. I want to say something which unfortunately is reality. And you mentioned a number of 400 billion. Now the question I would have asked is, what would it have costed to make that 400 billion of lost assets resilient to climate infrastructure? And I think one of the biggest problems that we face in adaptation and resilience is money tends to flow in after the event. You know, when there's a big headlines in the Financial Times or the New York Times or the BBC, then donors will come up and say, okay, here is some money to reconstruct and rebuild. But I want to turn that around and say, why can't we have access to a much smaller pot of money, like you are doing, in advance to make our current assets resilient to climate risks? And I think that is something we have to really propagate more for that, because that's the way you can make your current assets resilient to climate risks. So 2 things happen. When a climate disaster strikes, it destroys assets, which means for the SMEs, their source of livelihood is very often taken away. So it's going to cost them a lot more money to reconstruct, rebuild. But equally important, their source of livelihood has disappeared for some time. So I think that's a really important part of the conversation that we need to get out there. The second thing I want to mention is I think we need to measure investments in adaptation, which is what we're going to talk about today. But equally important, we need to talk about the impact you're having. And let me share some examples with you. If a government is investing in a road or solar farms, and they have 3 sites for those solar farms, 2 of them are going to be, according to climate models, prone to flooding. The third one will not. Now, my view is if the country chooses the third site for a solar farm, you're going to have a climate resilient solar farm without spending much money. So the number of dollars and cents is important, but that's not the only thing we need to measure. Similarly, you're constructing a road, and that road is in a very hot country that's going to be prone to very high temperatures, and that has an impact on the surface. So you can actually cover that road with a certain chemical today, which will make it resilient to higher temperatures. But unfortunately, this may be, and I'm just giving an example, it could be a $300 million road, but the amount of money you spend in making it climate resilient could only be $10 or $15 million. So instead of saying that you made a $300 million road resilient to climate risks, we are talking about the $20 million that went in. And we need to really move the conversation. So instead of 3, I'm going to be very brief and talk about 4 things we need. First, most important is we need good data. Unless and until we have good data, it's going to be very hard to know where climate risk will occur. So there are a lot of climate models which are projecting the future, and clearly that's going to be helpful. But when you get down to the micro level, when you look at flooding in cities, which we've just seen in Pakistan, then it's really about from street to street, what is the stormwater drainage. Until and unless we know that, we don't know where to put our money. So there are a lot of climate models there, but we just need a lot better data on the existing infrastructure and how it's exposed to climate risk. So that's one thing we clearly need. Second, I would argue is how do we then, government, either give incentives to this, because that is going to be important. Because adaptation does not lead to cash flows. It's a risk mitigation sort of way to look at life. So investing in a solar farm has cash flows. Investing in wind has cash flows. Investing in green real estate has cash flows. But when you make a building being put up by the Tata Group resilient to climate risks, you're ensuring, it's a sort of insurance policy in many ways. So we really need to look at it, and therefore the governments need to start looking at how can they incentivize this to start, and maybe have a carrot and stick approach. For example, very simple thing, if your asset is resilient to climate risks, the chances of you getting cheaper insurance coverage is much higher. So we need to look at the sort of incentives governments can give. But not only governments, I think what we need is, because a lot of these are higher upfront costs, we need a lot more blended finance. Risk mitigation facilities, guarantees, but also blended finance, sometimes just to drive down some of these costs. So I think those are 3 things that we need. The fourth one is, I want to talk about risk, and as a former risk person, I think I'm quite entitled to say that, is what's the sort of risk tolerance that you have today? And how do we get the message out there that climate risk is a real risk? And we need central banks of every country engaged. When they are getting banks to assess their portfolio risk, climate risk should be integral to that, because climate risk is a real risk, whether it's droughts in Kenya, flooding in Pakistan, forest fires in Europe. Climate risk is impacting the balance sheet of banks today, whether we like it or not. So we really need to start mainstreaming climate risk. And I'll just put in a plug for what IFC is doing. We're going to be mainstreaming Paris alignment for our entire portfolio, but I'll come to that soon. So 4 things, it's about data, it's about blended finance, government incentives, it's about how do you deploy financing faster at scale, and last but not least, risk and how do central banks and the government look at climate risk.
Many thanks, Vivek. And just a following question, because you already start speaking about the impact and the lesson, but tell us a little more, looking to building sustainable infrastructure and the green cities, what lesson you can share? Also lesson including on lesson that you have in our joint EU and IFC program, accelerating climate smart inclusive infrastructure in South Asia. It's a big program that we are co-funding together. Please.
Sure. So I think, it's still a relatively nascent area, and I don't think we have enough sort of history to talk about a lot of the lessons, but I'll try and touch upon some of the key areas. So one is really how do we assess some of these risks here? And there I think we're just building a GeoViewer tool which will help that. We've just launched something with BRI, which is the Building Resilience Index, which can go building by building and tell you what potential risks that building will be exposed to. But at a more macro level, what we've just launched is Apex. Apex is a tool for for making your existing cities more sustainable, or as you're building out new cities, how do you build them in a sustainable manner? And the Apex tool covers not only climate risk, but also better water management. So it's both adaptation and mitigation. So it's called Advanced Practices for Environmental Excellence in Cities. Even I don't remember the name always. But that is another tool which we are going to be launching just after this. At 4 o'clock, we're going to be talking about it. Yeah. So the lessons really is you need an early engagement and you need to come in a design stage. We need to be able to get governments to understand what risks their infrastructure is going to be exposed to. We need to get donors to come in before the event. We really need the money in, like the 400 billion, I don't know the number, but I suspect 100 or 200 million could have resulted in a lot of that 400 billion not being destroyed. So we need the money to come in before, not after the event. But you need really a way to be able to measure some of these impacts. That doesn't exist today. So coming back to the point I made on data from the governments, but also from the private sector. And very importantly, we need to build partnerships. This is not for the private sector alone. This is not for DFIs and MDBs alone. This is not for governments. It's everybody. The CSOs, the NGOs have to play a role. What I call the donor governments have to play a role. Philanthropies have to play a role. The private sector has to play a role. The lenders, everybody has to start looking at this in a far more holistic, but I would also say start recognizing that this is happening today. The issue with risk, having been a risk manager for a large part of my 24-year career with IFC, is people say, oh, this risk will not happen to me, it will happen to somebody else. But the reality is, we don't know where the next typhoon is going to come. You don't know when, we know where. You don't know when. So if you know where, there are enough climate risk models out there, which we're trying to leverage for our GeoViewer tool, which will help us build that. Yeah. And very importantly, we need to emphasize that to the stakeholders. I'll just touch upon very quickly the challenge that we're facing is how do we make sure the SMEs are climate resilient? Yeah. And that is critical because the SMEs are 50 to 60% of any economy. They, let alone climate risk, they don't even think about decarbonization. When SME wakes up, he or she thinks, what's going to happen to my receivable that's due today? Will my money come in or not? Because if the money doesn't come in today, their factory could stop. Their shop could stop because they don't have working capital the way. So large companies like his company have the ability to do that, but SMEs don't. But if an SME loses his or her business because of flooding, as we're seeing in Nigeria today, this is a great documentary in BBC that talked about it. They don't have a source of livelihood anymore. And that's going to increase poverty levels. That's going to ultimately increase job losses. And I'm afraid to say that could ultimately lead to what's already happening, which you all know very well in the EU, is migration and social unrest. So I think the part that we've not been able to tackle and we need to figure out a way collectively to do it is how do we get the SMEs to be more resilient to climate risk.
Many, many thanks. I think it deserves a round of applause. Mr. Vivek, I know that unfortunately you will have to leave before the end of the panel, but really many thanks for sharing with us your experience. And we move now to our next speaker, Mr. Amit Proti, that he was appointed Director General of the Coalition for Disaster Resilience Infrastructure last July. He has 25 years of leadership in urban planning and resilience infrastructure, with experience across North America, Asia, and Europe. Many thanks for being with us. And congratulations for your recent appointment too. Let me ask you, in the South Asian context, how can risk information in regard to resilience infrastructure investment have to be mainstreamed? Vivek already started to tackle the issue, but please, over to you.
Thank you, Carla. So first of all, it's a pleasure to be here. and participate in this discussion. As you just pointed out, I'm new in this role, but I'm not new to resilience. I've been doing resilience for a while. I worked across numerous cities across the world promoting urban resilience. So it's a topic that's of deep interest to me. And now giving the opportunity of leading the Coalition for Disaster Resilient Infrastructure, which is really an Indian government leadership role in developing the narrative on disaster resilient infrastructure in partnership with 30 other countries, including some of the developed countries, developing countries, and partners such as the World Bank. So it's really got a lot of political and major ambition coming from the highest level, effectively to influence how infrastructure is built today, tomorrow, day after tomorrow. Yeah? So that's really the ambition. Now we are new, so we are trying a lot of new things. We are small, which is really exciting because we can be nimble. We're also being opportunistic and saying, where are the gaps that we need to try to address? So I'll talk about a few things in those contexts. I think, Vivek, thank you for highlighting the need for risk, because obviously, unless we understand risk, we can't do anything with it. So, for us as well, we've said, how do we, as CDRI, take leadership in identifying what risks countries face in terms of their infrastructure. So we've come up with an ambition to actually publish a report every 2 years on the state of resilient infrastructure globally. That includes modeling and that includes an index. And this is not just climate, this is both natural hazards and climate. We're looking at 3 different hazard types: landslides, tropical cyclones, flood risks, earthquakes, tsunamis, droughts, and then overlaying that with climate. And the ambition is that this is a public database. So it's actually going to be publicly available through our, with UNEP, in partnership with UNEP. So the idea is that, the risk information has to be transparent. Let's put it out there at the country level. Let's start a dialogue on how are different countries starting to understand risk. So the first question or first point really is understanding risk, at least at the country level. Yeah? Related to that is once you know what your risk is, and you may or may not want to know it, but now I think there's more evidence that if you know it, you can do something about it. So how do you then go about coming up with examples of what do you actually need to do about that risk? So what we are trying to do is we are trying to work at least with India, and then we're going to go beyond India as well. Because of COVID, we had to be restricted to India. But trying to work at the state government level and saying, okay, let's look at your critical infrastructure. So we're working with the state of Odisha in India, which is prone to coastal cyclones. And we are saying, let's look at your power infrastructure. Now, it's very clear that the risk profile is changing because of climate change in Odisha, right? And the power infrastructure, the transmission distribution system is actually prone to those changing risks. So we are working to understand, first, what is your exposure to changing patterns, wind patterns, gust patterns, etc. What is your wind speed that you have to design your asset for? Okay, we are finding some things. Based on those findings, we are saying that, you have to do something. Either you strengthen your asset itself. So are your codes written to the point of, what is your code saying? Are you designing for 100 kilometers of wind, 200 kilometers? Where is your code in terms of the risk that you're facing? We're also saying that we have to accept that you will not be able to address the ultimate gust speed that you may be facing in certain parts. So based on that understanding of the vulnerability of the asset, we are saying, you have to now either strengthen certain assets, not across the state, because unless you have the information, the assumption might be that I actually take the entire state and I invest in the entire state and I strengthen assets in the entire state. But if you understand vulnerabilities, you may be able to say, well, you know what? It's only certain parts of the state that I need to think about. Your transmission lines are also at risk. So we're saying, in your entire state, where is that risk concentrated, right? So then how do you address it? Basically, okay, you may need to underground some of that transmission line, so that, again, that's one way to reduce risk. Now, what is the resilience aspect there? So this is going back again, Vivek, to your point on, the SMEs who might suffer if there is no power, and we're doing similar things in the telecom sector as well. So we're saying when we talk about resilience, at some level you have to accept that your power system may fail. The centralized power system may fail, right? So if you accept failure also as part of building the resilient narrative, then what do you need to ensure that services continue during that, that cyclone that comes? Which means you may need to look at alternate technologies. You may need to look at social programs. You may need to look at other things that can help reduce that risk. So we are doing several of similar studies, developing some methodologies, frameworks to start to address, to get decision makers in the infrastructure space to understand how do you address that risk. The third thing that we're trying to do is, and maybe I'm gray-haired enough to be able to say this, we have created our own problems. I come from an urban space. I understand how when we look at flooding, our typical response is build a piece of gray infrastructure, take the water away. That's created problems. So there's a certain methodology, there's a certain approach we've been using to building infrastructure, which I will proudly, boldly, stupidly call the 20th century way of building infrastructure. We need to go beyond that. Now, it may be that my generation is too old, or my generation is too rigid, or my generation doesn't really recognize it. Maybe it does. But we have to train the next generation to look at the problem of flooding, not from just a hard infrastructure point of view. So we're also putting a lot of emphasis on building a multidisciplinary sort of curriculum approaches to get the next generation to look at, if it's an issue of flooding, the answer is not just one solution, which is hard infrastructure, which has its own, you're locking in risks for the future, right? So bring in a combination of gray and green, understand that the intention is actually to solve a flooding problem. The intention is not to build a stormwater drain, right? So how do you actually get the next generation to understand that? And that's something we're also trying to work at. So for us, three things. Risk has to be transparent, methods, frameworks to integrate that so that we can demonstrate, and then training the next generation to look at these problems differently.
Many, many thanks. And Amit, take into account of what you were just saying, how you see that governments can coordinate better with the different actors and also build the set of policies that will be helpful to face these situations.
Yeah. So again, we are very new in this space, and looking at policies is something that's our remit as well. We haven't really entered that much. But part of the reason for building the evidence, both on the risk side, but also on the frameworks, so in the telecom sector, in the power sector, we are starting to look at urban heat, we are starting to look at urban flooding, we are starting to look at the social sector, health and schools, for example. So the idea is, let's start developing some examples first. And there's lots of examples that also exist, but as an organization, I think we need to build our muscle first to actually be able to understand how these work and don't work, and then start to bring that into the policy framework. The advantage we have is because we are very well connected at the national level in governments, because we are essentially a government-supported organization. I report to the Prime Minister's Principal Secretary, who sits on my governing council. The USAID's head sits on my governing council. So we have access at the highest level in government. The moment we are able to show evidence, we are able to then make an argument for what policies need to be changed. So from where I'm sitting right now, the idea is, let's first demonstrate enough examples so that the policy makers are convinced, because if they're convinced, then the policy making gets a bit easier.
Yes, of course. Many, many thanks, Amit. And let's move now to Carlos Sanchez. Many, many thanks for joining us. Carlos Sanchez is the Executive Director for the Coalition for Climate Resilience Investment, which was a flagship of COP26. And CCRI is lead the private sector and has a membership today of 120 institutions representing 20 trillion of assets in dollars, of assets committed to the development and to the testing of a solution for resilience investment decision making. I think it's a success story, what you succeeded to join in 1 year time. Carlos, many, many thanks. The question for you is, considering the simultaneous crisis that having been facing our societies in terms of epidemics, conflict, global recession, how channeling finance towards resilience is going to be more difficult, we can imagine. How does your organization to foresee the way forward, and what are there any lessons, maybe in your experience, to be learned from the past?
Thank you very much, and for the invitation, and everyone, and apologies for the slight delay. Really, really sorry. So very crucial question, and if you allow me, I will take a step back to frame a little bit why the coalition came to be a reality, because that is going to bring us very quickly to effectively answering that important question. But when we conceptualized CCRI back in 2019, we spent a lot of time in what is the problem, what is the manifestation of that problem, what could be an effective solution to that. And what we believe was a particular formulation of the problem was that we were seeing that the integration of physical climate risk in decision making, and broadly or simplistically, let's think of government decision making and private investment decision making, we were seeing that when attempted in a genuine way and holistically integrating physical climate risk in that cost-benefit analysis, be it a net present value for a cash flow model or being a socioeconomic calculation, was actually not only properly supported, it was oftentimes penalized. And that is where we started to frame this as a market failure. And that is, we are not relying on the right information and in the right interpretation of that information to their embed climate resilience into decision making. And accordingly, what we are seeing is that integration is not properly neither enforced nor rewarded. And that was a crucial starting point to justify the need for a collaborative approach across industries, sectors, and regions, and indeed competitors, to develop public goods that are transparent, that are accessible, and that have the buy-in of the system for those to be catalytic and change the narrative. We also realize that when we talk about investing in resilience, there are many and all equally legitimate responses as to what is the underlying value that we are protecting. So at the end of the day, as Amit was saying, it's about risk, and it's the risk of certain types of value to being affected by physical climate risk. And we quickly also identified another problem, and that is that when we talk about investing in resilience, it is a very diverse bag of values, and all equally important, all equally legitimate, but they all beg for different approaches for their enhancement, even more than the protection. So we could say that there is economic value for a country, there is a social vulnerability, there is a social continuity that needs to be protected. There is a natural ecosystemic value that we need to protect, because it's also, and that is where we have a very interesting but also dangerous feedback loop, that nature is exposed, but nature is also protecting us. So there is a very dangerous vicious cycle that we need to prevent and revert. And then there is financial value, that at the end of the day, when we talk about investors enhancing the integration of physical climate risk, it's about their view as risk-adjusted returns. And with that perspective, we started to differentiate, and with that, we started to understand what was our work structure, that basically had a government solutions working group, what we call the Systemic Resilience Forum, and where we have the Investor Solutions Working Group, what we call the Asset Design and Structuring Working Group. And within each of those, we spent a lot of time in identifying what were the key users, and with that, what were the key needs, drivers for action, that, let's say, when you close the doors, what is driving really that allocation of effort, units of effort, be it fiscal, be it capital. And we started to understand what is the underlying case for integration, key incentives, and therefore the needs for responding to that. So really a strong focus on defining a very detailed use case for each. We could simplify to a Minister of Finance and a CIO. But then from there, our, let's call it theory of change, followed with the need to then bring the right data. And the right data with a multiple interpretation data is, so an asset, geolocation, attributes, observations of hazards, modeling. There are many, many things that go under that banner. But basically, we were trying to understand for that decision-making process, what was the time scale? And for that time scale, what was the analytical approach that would deliver the most? Because if we are having a time scale of decision that is 15, 20 years, the more stochastic probabilistic approaches can bring you somewhere, but you need something that will really inform that. Then from there, the next focus was, of course, in developing the solutions. And for each of those working groups, we are advancing solutions that enhance that decision making. So for the government decision making, we have let's say flagship 3 solutions that are being developed. So there is a national investment prioritization tool, which championed in a wonderful partnership with the government of Jamaica, is enabling decision making to be based on identifying, locating, and measuring within selected infrastructure networks what are the largest concentrations, not of that bridge that is worth X, and that, of course, there is a very important economic value at risk, but what is the economic continuity of that country that depends on that bridge? What is the social continuity of that country that depends on that bridge? What is the nature ecosystemic continuity? So that at the end of the day, we can measure asset value plus economic value risk plus social value risk plus ecosystem. And that is what we really enable decision making. And what we are doing with that is downscaling that to project level and prioritizing in partnership with the Ministry of Finance in Jamaica, so that that ultimate ranking has a proven ability to deliver fiscal efficiency. I recognize I need to answer your question. So I'm going to go there with this point, because we live in challenging circumstances, and we all know about the geopolitical state of the world, and economically speaking, inflation rising, interest rates are following, and when we talk about particularly that point about interest rates, that is a particularly important challenge, and that is because of the nature of discounting future cash flows or decision making, and for that purpose is not only the investment, the government applies the same also consideration. The higher the interest rates, the more minuscule that future impact will be. And that is an incredible challenge. So we need to accept that reality. We are working on how we can really improve the recognition of those impacts that will happen in year 10, 15, 20. We desperately need to do that, and we are in a way succeeding with it. But the flip side to the challenging conditions for integrating physical climate risk is that indeed solutions that deliver fiscal efficiency are more needed than ever. So, and I believe that as fellow panelists are all working towards, we cannot support a country and that support result in more fiscal constraint, in more fiscal needs. What we need to deliver is that ability to ensure that they are going to have access to fiscal space instead of that is really challenging to do, but with the right integration, holistic, understanding the multiple dimensions and levels of exposure, and enabling that strategic long-term decision-making, we believe that is possible, but absolutely agree, the current conditions are challenging.
Many thanks, Carlos. And looking to, just a following question, looking to, yes, many thanks, Vivek. And looking to, here in the COP, we are talking a lot about the technological advance. And, sorry, Carlos. Here in the COP, we are talking about technological advance that are crucial, are essential for a cost-effective, green and resilient transition. My question is just what contribution can an organization as the coalition can make in this area to catalyze efforts in the South Asia?
Thank you for that question, and I believe knowing the excellent work of Hamid, he will certainly have something to add. If I speak of the coalition, what we are seeing is that on the technological side, on that delivery of value and enhancing decision making, of course, the baseline climate science data, how we interpret that, how we present that is crucial. It is the absolute fundamental starting point to any assessment. However, what we are also realizing is that it is not only, let's say, throwing a scary map at the table. We need to inform how that is being interpreted for the purpose of that decision making. And indeed, with that, there is an incredible need for technological solutions that really adjust that interpretation function to the climate risk data and the analytics. So, for example, this work in Jamaica, visualizing how economic social flows circulate and become more or less exposed in a given infrastructure network, how social value particularly also is undergoing that exposure. But at the cash flow model level, how you interpret physical climate risk data for the purpose of a revenue projection, where it's independent of the structural nature of the asset, as compared to CapEx or OpEx, is absolutely different. So they beg for very bespoke and very tailored approaches to that interpretation. So what we are finding is that users, apart from undoubtedly requiring the best analytical scientific data, they need more support. They need more support for that interpretation to bring it to their key decision metrics that speak to what at the end of the day we're finding that is delivering not minimizing the downside, which is crucial and will always be the crucial part, but then also unlocking an upside. And it is there. It is there, and we believe that with the adjustment that we are seeing in market forces, in how this integration is being better recognized and therefore better enforced and better rewarded, we are seeing that there is I don't know if to say finally, because we've been always for years speaking about climate risk, climate opportunities, and the framing of the opportunity has always been so challenging. We may be able to deliver that added value, but technical solutions are absolutely pivotal in that regard.
Thank you. Thank you very much, Carlos. I see the time running. So let me introduce the last but not least, our final speaker, Mr. Erlin Oberoi, who is the Senior Vice President and also the Head of a Project for Tata Realty and Infrastructure Limited and the Tata Housing Company Limited. Tata Housing is one of the biggest real estate developers in India, and Erlin has over 30 years of experience in the real estate industry in India. Erlin, thank you very much for being here with us today. And let me just ask about your organization, the Tata Group, which has committed to reaching carbon neutrality by 2045. It's a big number. We understand that one of your projects in Chennai has achieved your first zero carbon certificate using IFC EDGE Green Building Certification. Can you tell us more about this certification and also how Tata plans in general to decarbonize its entire real estate portfolio that is very, very big? Over to you.
Thank you, Carla. And very good evening to all of you. Yes, indeed, this is a very good citation. One of our projects, a large IT park in south of India, the city called Chennai, approximately 8 million square feet of development, has very recently, last week only, been certified as the carbon neutral or zero carbon project. And this is the first building project in India to get this certification. So thank you, IFC, and I also want to thank our auditors there, Centali. And this project, which was conceived and completed in different phases, but was over by 2011 and 2014, the final phase. This project, done about a decade back, on today as it stands, has been certified as the first carbon neutral project in India. Now that stands or that conveys the message of our commitment of doing real estate with responsibility. This building, which we completed and is leased out now, has got almost 42 point some odd percentage of energy saving. 80% of the energy required for the building is through wind and solar. Wind and solar are now very common, but 10 years back in a country like India, we pioneered. So that is the extent of the energy conversion there. Water to the extent of 86%, and similarly material embedded carbon to 80%. Energy efficiency, then achieving water efficiency, and then material efficiency also. Special technologies were involved here, like doing PT tendons for the slab stressing, which saved us some steel. So this is a project which we are very proud of. Having said that, all of our commercial developments in the country, and they are, you name it, they are GBCI certified green buildings, platinum, gold, and also they are EDGE certified buildings in the country. They are well certified. We in fact give direction to the industry, and we are the EDGE champion in country, India. So that's the state of our commitment, and that's the responsibility we own. Now coming to Tata's, we are a company which is, from salt to software. Approximately 105 billion of annual revenue and 800,000 people working across 100 different countries in the world. And this company is purely, a custodian of trust the people have in the company. And when they have so much of trust with the Tata Group, it becomes all the more difficult to, maintain those trusts and the benevolence they have. And that's the reason one of these companies which I work for, Tata Realty, which is majorly into real estate development, we really, thought of and, worked out an ESG goal that we are going to do real estate with responsibility. And when I say real estate with responsibility, we say ESG with 5 R's. So leading the change. Each R here, represents. So for example, we say when we do real estate with responsibility or responsible real estate, it has to be a resilient structure, whatever we are developing. It has to replenish nature in one form or the other. It has to reap talent and then respect lives. And then responsible value chain governance. So right from the source of building materials. So we really want to be having a complete cycle of, the circular economy here. And this is something which we are committed to. And going forward also, right from every aspect, from the day we design a project, or we conceive a project rather, all aspects of, simulation and energy conservation are paramount. And these are the guiding principles, and we stand by.
Many, many thanks, Arlene. And we are talking about resilience. Allow me to say that several Indian cities have recently been severely impacted by climate-related events. We have seen several flooding in Bangalore, for example. Can you talk to us about Tata plans on specifically improving the climate resilience of your building stock?
Yes, Carla. So, the extreme events which have been happening in most of the parts of the world, India also being affected, is, majorly because the migration is happening for people from rural to urban. And these populations in urban cities are living in very hazardous areas, which are very dense. The population density is so high, one can't even, imagine. So that is one reason which is leading to, the events which are majorly heat-related and precipitation-related issues. So this is something which is affecting. And according to an estimate, here also we have these numbers available, approximately $210 billion of damage around the world in this year, 2020, which is 3 times what, happened in 2019. So this magnitude and this frequency, India is most vulnerable to. And there is a need to again, this is an initiative we are partnering with IFC itself and working towards developing. They have a tool and an self-assessment online called Building Resilience Index. So this is something which we are now partnering with them and developing or working towards on getting our projects rated on Building Resilience Index, which basically is a tool or a measure that how well a structure or a building will perform or responds to the shock. Now, the shock can be, intermittent flooding, heavy rains, maybe tsunami, which affected the coastal towns again. So we are cautious. We are very, very, concerned about this. And because the cost of rebuilding can be terribly high. So the necessity is for the new structure, which we are planning now, if we can maintain this, we can bring the cost down and then make our structures more prone to absorbing these shocks, which these even can, reflect or affect the structure with.
Many, many, many thanks, Arlene. And I can see that we have just 4 minutes that are remaining. Allow me to just turn to our audience to see if there are any questions for our panelists. And if yes, please indicate to who you are addressing the question. No question? Yes, please. Okay, please. Please indicate to which panelist.
Hello, I'm Helen Sulg from Estonia, an environmental agency, and I was wondering during your discussion that what's the role of insurance companies? Have you also involved them into the banking, or any thoughts on that? Would be interesting to know.
Thank you very much. Please.
Thank you very much.
There is one additional question. Maybe we can take. Unfortunately, we have just 3 minutes, but please.
Thank you. Bahar Özay. I'm coming from Istanbul, Turkey, and we are in a very vulnerable region as well. I'm really very wondering 2 questions, as you are coming from the industry and also banking sector. So the 2 things, sustainable tourism, how you're just thinking about it, especially, sir, I'm really very wondering real estate and sustainability kind of things, how you're linking this, because we're talking about building infrastructure for climate shocks, not tomorrow, but today. So these 2 topics, I'm really very wondering if you can have an answer. I will be very, very happy. Thank you.
Many, many thanks. Who wants to start? Carlos. Yes, please, in this side.
Be quick. So thanks for both sets of questions. I mean, with regard to insurance, within the CCRI, we have, and actually there's been even an update since preparing the panel. Now we are 131 members and 27 trillion represented. So really, really pleased. But at the end of the day, that means a lot and nothing. What we need to do is deliver. And what we are very proud is that diversification. They having within the banner of private sector, having pension funds, having fund managers, having banks, insurance, risk data providers, engineering, and other important bits and pieces. And insurance plays an important role, undoubtedly, a very important role in terms of that 3 things fundamentally. So it is the analytics, very strong analytics that have been developed over 30 years for what is called the CAT modeling. There is the risk transfer, the insurance per se, where there is huge advancement in terms of innovative solutions that actually detach the payment from the reporting loss and damage. So that is really interesting in the parametric space. And then there is capital, because on the asset side of any insurance company, there is a need to generate. I have to be quick. So insurance is very important, but we also need to remember that it is in the rather short term, so 1 to 2 years, it is one hazard, and it's one expression of materiality that is loss and damage. So it's really important, but it needs to be complemented by other approaches, investment that goes into the right time scale. In terms of tourism, and I finish with that, it's really important because there we see the impact of chronic hazards to be really fundamentally strong. So sea level rise, distraction of costs, average temperature, that are making certain destinations more challenging to receive, but there are solutions that can be brought to the table. I should stop there, but we can continue later.
Many thanks, Carlos. Arlene, do you want to add something? We have just some minutes.
I actually am not very clear about what expectations are.
Okay, Hamid, please.
No, I think just what Carlos you pointed out also just now. Risk is changing. I was in Amsterdam 3 years back before the pandemic as a tourist, and you couldn't travel because it was 35 degrees. 35 degrees in Amsterdam versus 35 degrees in Delhi is very different. So part of it is this is also an opportunity to bring the private actor into the discussion, because hotels and tourism industries, a lot of it is controlled by the private sector. So if we can figure out ways of saying, this is your risk in the future, if this is an opportunity to do something together, right? So, fine.
Okay, yeah, so I will, I get it right now. At the design stages, what we do when we are planning a building, there are certain aspects we need to be considered, like window wall ratio, we call it WWR. So if you fix up those nicely, you'll have less heat gain in the building. You will need less of air conditioning to be done for the building. You'll need less of energy. Similarly, for flood, we got to do floodplain analysis, what has transpired in the last 30 years. Maybe you don't have data, longer than that. But then we fix up the building plinth, you're cautious of that, okay, this is something which will withstand the flood. So these are some cautions which we need to do while planning or designing a structure.
Many thanks, Ali. Unfortunately, our minutes have ended. We have to close our session, but many thanks to all of you for sharing your knowledge and your experience with us. It is a very important matter. Many thanks.